Well, let's get a technical view on the markets. We have Rahul Sharma, Director and Head of Technical and Derivatives of JM Financial, who joins us on the show. Hi, Rahul. Good morning. And, well, the mood is very, very somber. But I recall a month or so ago when you joined in here on Chartbusters, the markets were at around 22,700. And you said, don't rule out a 1,000-point pullback. If I remember correctly, we got a 900-point pullback from there. So we went to around the 23,600 thereabouts. But that's got sold into. Now you believe that they're closer to the bottom yet again. Tell us the levels you're tracking on the downside. And do you think that risk reward will favor the bulls from here on? Because the mood is very, very somber. So those levels are what we're looking forward to.
Yeah, good morning, Nigel and Mangalam, both of you. So there are 5 key points today. So one is the Nifty RSI has gone below 25, the daily RSI. This has happened only 5 times in the last 5 years. So this is the 5th time this is actually happening. Secondly, once Nifty RSI has gone below 25, it has taken a max of 1 month for the market to form a base, and then a recovery starts from there. So considering the way the past has played out, we feel there is a strong possibility that in the month of March, we form that base in the Nifty. Over the next 2 to 3 weeks, we may see back and forth action happening. And from there, I think from April onwards, a meaningful recovery will start. Now, what is that base area that we are looking at? So 21,800 to 22,000 is where the crucial support for the Nifty is. This is the 500-day exponential moving average. Over long-term charts, long-term periods, this average has proved out to be a very reliable support for the Nifty. So we feel that we are very close to that. And in the next few weeks, in the next few trading sessions, in fact, the way we are falling today, we may be very close to that area. And from April onwards, we feel the recovery can start. Now, where are we placing our bets on? So if you see all the sectoral indices, it is Junior Nifty, which is in the sweetest spot in terms of not too many, small caps, mid caps are not there. These are large cap stocks, which are around 25% from the peak. So if you have like a 6-month time frame, 25% kind of an upside can be had in the Junior Nifty, which is a high beta index. Retail traders can look to buy, investors can look to buy Junior Bees, which is an ETF, which is actively traded and can be a good trade coming around. Now, what are the sectors which are sort of keeping the market afloat? 3 sectors broadly. One is private banks. Private banks are seeing exhaustion and selling pressure. In fact, some of them are ready for a proper reversal of a kind. Then we have financials, which are very strong. We saw Bajaj Twins hitting new highs, even in this kind of a bear market. And thirdly, which is their index heavyweight Reliance is not breaking 1200 level. So these are the 3 areas of the market, 3 pockets of the market which are relatively holding on to well. And we feel that in the time to come, these are the green shoots which could probably drive the market higher. So Junior Nifty, and on the private banking space, Axis Bank is our top pick. We feel that these are 2 things which can be bought in this correction. And Nifty, as far as Nifty is concerned, 21,800 to 20,000 is where we feel the market could bottom out in the month of March.
Fair point. Clear levels there. 21,800 to 22,000 is the level at which you believe the Nifty can bottom out. You are bullish on Axis Bank. That's actually one of the few stocks which is holding in the green today, currently at the high point of trade. And you're bullish on Nifty Junior as well. Looking at a couple of the broader market names, the Nifty Next 50 index has actually seen a recovery from the lows. The market on the whole has actually, from an index level, because of the heavyweights that we spoke about earlier, has seen some bit of recovery. But you also, said that you can see meaningful recovery only in April. So are you ruling out any big move in March? Would March be a consolidation month where you move in a band? If yes, then what are those levels that you're looking at in this consolidation band?
Yeah, absolutely bang on. So we've been into this correction for a while now, and it will take some time for the confidence of market participants to come back. So we are not really expecting a V-shaped recovery from once we hit the bottom. So once probably we hit 21,800, there could be a back and forth action. We may see a small bounce back here and there. And spending time around key support levels is actually healthy for the market, because that will essentially ensure that the next leg of rally that happens has a good launch pad to begin with. So April is where we will see the quarterly numbers coming up. Last 2 quarters numbers have been subdued. So anything which is incrementally better would be a reason for the markets to go up from there. So April is where we are expecting a meaningful recovery to happen. March could be that month where we could just spend time building a base. 21,800 on the downside We may momentarily break that intraday, intra-week as well, but on a closing basis, I think that level should hold out. And on the upside, 22,500, 22,700 should act as a resistance. So broadly, this 800, 900 point kind of a range is where we expect the Nifty to spend time. And once that is done, probably April could be the trigger. Earnings could be the trigger where we could see the markets getting into a structural recovery, which may last for the coming few months.
I think this will be a structured recovery if we hold on to the 21,800. Not like the last time around, we bounced 900 points, but then we made a lower low yet again. So you think this time around, we're looking to form a near-term base at 21,800 and then bounce from there. Is that correct?
Yeah, absolutely. So we are expecting a structural recovery which could go on for months.
Got it. Okay, all right. You briefly mentioned Axis Bank, but what about the Nifty Bank? One observation the last few days, last 2 days at least, is the Nifty Bank was making higher highs and higher lows. Now today it's made a lower low yet again. The hope is that, that fundamentally as well, valuations are pretty much okay. The problem is the FI selling, which is puncturing the structure on the Nifty Bank. What are the levels you're looking at on the Nifty Bank? Because the IT index for the time being, it appears it's, taking a bit of a back foot. So we need to recover. The banks need to come out and play that big innings. Your take?
Yeah, so for a change, Bank Nifty has not led this downside in the month of February. Now, that reason is primarily the outperformance in the private banks. PSU banks are still, the laggards are still witnessing shorts. In fact, rollovers have been quite strong. SBI, for example, the PSU bank leader, had a year high combined open interest. The open positions were on the short side heavily, and they are not in a hurry to cover their shorts, at least below 700. So my sense is Bank Nifty could witness sideways action, especially because the individual constituents are not clearly out of the woods, especially the PSU banking space. So it's best to stick to the ones which are leading the rally. So at this point in time, we are seeing HDFC Bank bottomed out way before Nifty or Bank Nifty sort of bottomed out. We are seeing Axis Bank holding on well. We are seeing Kotak Bank, from phenomenal numbers, the stock is trading relatively at much higher levels. So private banks is the way to go. Financials on the other space are the sort of leaders in this entire fall, which is why Bajaj Twins, Cholamandalam, Muthoot Finance, these are stocks which have been doing very well. So it's best to stick to leaders. This is, again, this is not a market where you're expecting a V-shaped recovery, V-shaped rally. It will take time, but I think it's best to stick with the sector leaders, stick with, stocks which are not witnessing further selling pressure. And these are the few names which we've discussed could sort of, stand this test of base formation that may happen in the month of March.
Just one final question, and if you could answer that in a word, Rahul, if one was to buy one stock from here on at this level for the next 6 months, not necessarily large cap, not necessarily some of these leaders that you're talking about, but in the mid and small cap space, because you're bullish on Nifty Junior.
Yeah, so Mangalam, in fact, I have personally invested in Junior Nifty Bs. I'm expecting this index to turn around in a big way. And the nature of this index has been very high beta. So once things turn around, the returns can be very quick. So, as an investment, Nifty Next 50 or Junior Nifty, as we may all call it, is the best way to go. ETFs are, a relatively easier instrument to trade, especially with kind of the fear that is there in the street. And once, things start improving, it's then better to get onto stocks. So at this point in time, Junior Nifty is the way to go.
Okay, Junior Nifty is the way to go. We will take that on board. Thank you, Rahul, for joining in.